Hey everyone, welcome back to the channel. Today we are tearing apart one of the most anticipated IPOs which hit the Indian markets in recent time. Meesho, the buzz is undeniable. But before you get swept up in the hype, we are doing a deep dive analysis, 30 reasons why it could be a game changer and 30 serious and flags you absolutely need to know. This is not just surface level review. This is your ultimate guide to understanding if Meesho's upcoming IPO is a golden opportunity or a potential trap. So let's get started. First, a quick refresher. What exactly is Meesho? As its core, Meesho is an Indian e-commerce company primarily focusing on social commerce and reaching the underserved tier 2, 3 and even 4 cities across India. They empower small business and individual sellers to reach customers through an asset-light model. They have grown incredibly fast, backed by some of the biggest names in venture capital. But fast growth does not always equal guaranteed profits. Alright, let's kick things up with the bull case. Why are investors so excited about Meesho? Here are the 30 compelling reasons. Number 1. Strong demand and huge subscription. IPO already oversubscribed on day 1 itself. Then high gray market premium. Informal market shows strong premium reflecting positive sentiment and listing day expectations. Large IPO size and significant capital raise. Then 4. Valuation at upper band gives strong growth narrative. 5th. Asset-light marketplace model. 6th. Focus on affordability and value commerce. 7. Large addressable market in under-penetrated geographies. 8. Rapid user or order growth. 9. Massive backend investment plan. Cloud, AI or ML logistics. 10. Potential operational efficiency via scale and tech. 11. Strong anchor investor backing. 12. Zero commission seller model. 13. Lower entry barriers for sellers. 14. Diversified marketplace across many product categories. 15. First mover or early mover advantage in social commerce or value commerce in India. 16. Potential to expand into new segments. Example groceries, fintech, credit for sellers, financial services per management statement. 17. Improving unit economics over time with scale, tech and logistic optimization. 18. Strong macro tailwinds. Rising internet penetration, digital adoptions, e-commerce growth in India. 19. Potential for strong network effects. More sellers attract more buyers attract more sellers. 20. IPO proceeds allocated to growth, not just OFS, indicates reinvestment, not just exit of the existing investors. 21. Backed by reputed investors and global funds, gives credibility and resources. 22. Large user base and experience in India's non-metro markets. 23. Potential long-term play, e-commerce plus fintech plus logistic plus social commerce is a diversified growth vectors. 24. Lower price to sales multiple compared to some high valuation peers. 25. Retail investor friendly IPO, lot size manageable, price band reasonable. 26. High visibility and hype could lead to good first day listing gains if market sentiment holds. 27. Transparent IPO documents and clear fund utilization plan. Cloud, tech, logistic adds confidence in management strategy. 28. E-commerce consumption in India still under-penetrated. Huge runway for growth over next 5 to 10 years. 29. Potential to democratize online shopping for price-sensitive masses, social impact plus business growth combined. 30. For long-term investors willing to take risk, could be a high reward bet if Meesho turns profitable and scales fast. Now, let's flip the coin. Every investment has risk and Meesho is no exception. Here are 30 serious cons that the bear market analysts are pointing to and why you should approach with caution. If tech or logistic investments don't yield efficient scalar or cost reduction, burn rate may stay high. 21. Dilution risk for early investors, share issuance and OFS may dilute value if returns don't scale. 22. Reliance on low cost, high volume as AOV rises may lose core customer base as AOV stays low, margin remains slim. Tough balancing act. 23. Pair and substitute threats, traditional offline retail, wholesale markets, other e-commerce or social commerce platforms may eat into Meesho's target segment over time. 24. Unproven monetization beyond just GMB, marketplace take rate, seller fees, ads, logistic margin, uncertain if enough to drive profits, many dependency. 25. Customer acquisition cost and marketing spend could escalate to maintain growth, pressure on cash flows. 26. Risk of negative perception if product quality or service complaint increase hurts long-term brand and retention. 27. Structural risk in logistic and supply chain, especially in remote tier 2 or 3 towns. Delivery delay, high return cost inefficiencies can degrade user experience. 28. Uncertain regulatory and taxation environment for e-commerce and online marketplace in India may affect margins or operation external risk. 29. IPO valuation relies heavily on future growth. If growth slows, downside could be steep, high risk, high reward. 30. Not ideal for short-term investors. Volatility, uncertain listing gains, and long horizon required to realize value. Need patience, risk tolerance. So after weighing 30 pros against 30 cons, what is the verdict? The Meesho IPO presents a fascinating dilemma. On one hand, you have incredible growth, a disruptive business model, and a massive addressable market. On the other, significant cash burn, fierce competition, and a potentially stretched valuation. My personal take, I'm watching this one very closely. The underlying business model is powerful, but the price you pay matter immensely. I would be looking for clear signs of sustained profitability and how they differentiate themselves long term against the giants. It's not a clear buy or avoid for me right now. It's a monitor with extreme cautions until the picture becomes clearer post listing. So what do you think about Meesho IPO? Are you bullish, bearish, or cautiously optimistic? Let me know in the comment below. Don't forget to like this video if you found this deep dive helpful. Subscribe for more in-depth IPO analysis and hit that notification bell so you do not miss any update from my side. Remember, investing a marathon, not a sprint. Always do your own research and consult a financial advisor. Thanks for watching and I will see you in the next video. Thank you guys. Thanks a lot for watching me today.